technical analysis helps us identify price trends over time. There's a couple key things I want to note about technical analysis. First, you want to be able to spot the trend. And what I mean by that is you want to identify if the market is trending upwards or it's trending downwards. Perhaps the market's even just going sideways. Next, entries and exits. So technical analysis can show you where the market has support and where it has resistance. And if you use these levels, you can identify where you should buy and where you should sell. Technical analysis also helps you control your risk. So because you've identified where these support and resistance levels are, you can set up buy orders and sell orders at the appropriate points. And lastly, technical analysis can help you avoid ruin. If you follow a technical analysis pattern and you're disciplined about it, over the long run, you're putting reward more in your favor and helping to minimize your risk. So let's go into a few charts right now so I can show you some uptrends and downtrends. Now you're looking at a chart of Bitcoin versus the US dollar. Every one of these candles represents 1 day's worth of time, and this is on the Coinbase exchange. Now you'll first notice that the date here starts back in summer 2017, specifically in August. And you'll note that the price of Bitcoin was trending higher throughout most of 2017. Now this uptrend ended in a classic, what's known as a blow-off top. And so think of this from an investor's perspective. First, you see the prices trending higher over time, and then this signifies to other people that prices will not go down again, so they buy at a much higher price than they probably should have. Basically, the person who is buying Bitcoin at 20,000 in an uptrend here is not really buying Bitcoin at 20,000. They're buying the belief that Bitcoin is going to 100,000 or 500,000 or a million. So you have all these high hopes and expectations that happen towards highs. Now, I'll note something about the crypto markets that's different from other markets is that they've gone through this rapid evolution. We've had 5 or 6 major bull and bear markets in the last decade. And that's not something that stock markets or Forex markets or bond markets go through in such a short period of time. Now, after you had this blow-off high in Bitcoin, you started the downtrend. And this is when prices quickly declined right off the bat, and this scared a lot of people out. So investors who had bought at this point of the chart are now worried that the prices aren't going up any higher, so they sell. And one thing that's indicative of downtrends is they're not as smooth as uptrends. You can see in this chart that there are a lot of bounces and a lot more volatility on the way down than there were on the way up. And that's something that is native to a bear market where the price doesn't go smoothly either way. They say that bear markets kill both bulls and bears because of the volatility. So I'm going to show you another chart of Bitcoin. And this is a daily chart on Coinbase and zoomed in a little bit more. So the frame of this action starts in June of 2017 and it ends in December. Now this is how Bitcoin was trending throughout most of 2017. And you'll note here that it doesn't look as smooth once you start zooming in on this market. It's actually very volatile. So you had Bitcoin hit a price high of around 5,000 in September, but then just 2 weeks later, it dropped to about 3,200. So you're looking at a 30 to 40% decline in just a matter of weeks. Now, people who say that they bought Bitcoin in 2017 and made 1,300% gains, you have to keep in mind that it wasn't easy. There was a lot of volatility. So if you didn't buy this market at the right points, you could have lost a lot of money.